Bitcoin has now risen for 3 consecutive months. Why does that matter? You're never in a bear market if Bitcoin closes up 3 consecutive months. Crypto's been a huge diversifier when you think about 10-year cycles. We think Bitcoin fair value should be, which is around 250,000. If crypto winter has ended, by the end of this year, we're going to see some strong moves, just like we've been seeing with memory stocks. So I know there's the fog of war. The US is at war with Iran, but that really shouldn't affect where things are scarce and what things are working. And that's the case because Bitcoin has now risen for 3 consecutive months. And as long as Bitcoin closes out above 76,000, that'll be the 3rd consecutive month. Why does that matter? You're never in a bear market if Bitcoin closes up 3 consecutive months. So since the inception of Bitcoin, being up 2 months in a row could happen in a bear market. For instance, that happened in 2022. But you've never had 3 consecutive months. So to me, if Bitcoin closes up above 76,000 this month, the bear market is definitively over. The second is that software stocks have bottomed, and as you know, software stocks have been highly correlated to Bitcoin. In fact, at Fundstrat on May 1st, we added software to our top sector picks. So we're recommending software names along with Mag 7, of course the semis, and crypto as our top sector picks at Fundstrat. And since the war started, crypto actually has been the best performing assets. You can see Ethereum is the best performing asset since the start of the Iran war. Okay, and the trends have turned positive. In fact, John Bollinger said his trend model turned positive and he now has a full position in Bitcoin. All right, so you might be so burned out because of the last crypto winter that you decided to give up on crypto. But keep in mind, crypto has been a huge diversifier. Okay, so I want to go back 10 years and say, if you had 0 exposure to Ethereum 10 years ago, and you just bought the S&P, you'd have $229,000. That's the first row there. And that's starting with 100,000. If you bought just 1% of your portfolio into Ethereum 10 years ago, your total portfolio would be worth 520,000. So you doubled your total portfolio by adding 1% to Ethereum. By the way, if you added 5%, which is the 3rd row, you could see that your portfolio would be worth 1.7 million, basically 8 times your return. So crypto's been a huge diversifier when you think about 10-year cycles. And it's a great hedge because another way to think of this is to say, how much of another asset do you need to own to absorb a 50% loss in the S&P 500? For Ethereum, if you had a 0.4% exposure, you would actually completely offset a catastrophe in your equity holdings. If you had to do this with gold, you would need to have 37% of your portfolio in gold. So again, Ethereum has provided the same hedge protection for 1/100th the exposure. So as we think about Ethereum's price, I do think it all comes down to what Bitcoin does. So here's Ethereum's price ratio. I think the long-term average is the number just to think about, which is 0.048, and the 2021 high of 0.087. If I lay that to where we think Bitcoin fair value should be, which is around 250,000, the 2021 high average, for instance, would get you to 22,000 Ethereum. And of course, as you can see, in crypto spring, in the early part of a cycle, Ethereum doesn't really move reflexively. So I think you're going to have plenty of time to buy crypto over the next few months. But again, if crypto winter has ended, by the end of this year, we're going to see some strong moves, just like we've been seeing with memory stocks currently. And Ethereum's exiting along consolidation. It's currently 2,300, but you can see it's been consolidating for 5 years. The first consolidation ended with Ethereum making a 227x. The second consolidation that happened in Ethereum ended with a 54x. So I think this third consolidation is going to be pulled up because of tokenization and agentic AI. And maybe Ethereum's at 25x from here. Okay, so why do I think Ethereum and crypto is positioned to actually have a bull market? It's really because it represents the future of money. Elon Musk said the system won't use dollars as a currency in the future. It's just mass and energy. He was referring to basically compute and building compute in space, but his point is correct that what is scarce in the future is going to be compute and energy. And LinkedIn's founder Reid Hoffman even said crypto becomes critical in an AI world, and he actually didn't think he'd ever be quoted by Kalshi. And Mark Andreessen says the grand unification of AI and crypto agents are going to need money. And even Larry Fink, who I saw at Milken, the Milken Institute conference this past week, he says he believes a new asset class is going to be buying futures of compute. Well, already a lot's happened with tokenization. Stablecoin volumes, and this is from Bitwise, have now exceeded Visa payments. So we already know we're past the point of critical mass. And Grayscale had a nice report where they're projecting tokenization's essentially going to be a $300 trillion market. Now, up until this point, the value of the layer 1, the L1, was equal to the size of the tokenized market. Okay, so if this math holds, then the total crypto market will be 300 trillion. I'm not sure if that ratio will hold, but of course the argument still is true that networks that host a large share of tokenized activity, and this is from Grayscale, is going to capture the economic value. So if the total market's 300 trillion and crypto's a $2 trillion market today, I think crypto network value is going to be clearly above 2 trillion. And I published this before. It's just a list of things that agentic AI, why they need to run on crypto. You can actually pull this up from our presentation, which I'm sure will be available after I speak on the Bitmine website. Okay, so what does this all mean? Well, I think it means that the banks of the future are going to be replaced by DeFi and crypto native companies. And let me give you an example. The most profitable bank in the world today is JP Morgan, which is projected to make $60 billion this year, which is a huge number, and they need 300,000 employees to do that. But let's mix in Tether and Jane Street. So Jane Street is a crypto trading firm. Okay, they move money just like banks move money, but they're specialized in moving money very quickly using computerized system. Well, they made $40 billion last year, which is almost as much money as JP Morgan, but with only 3,000 employees, okay? So in other words, like, they're much better returning profit per employee or return on invested capital. And then take a company like Tether, which only has 300 employees, and they made $15,000. So the way I would look at it is that if you combine Tether and Jane Street, you'd have more profits than JP Morgan and only 3,300 employees. But the point I'm making here is that native digital companies using blockchain as settlement eliminate a lot of processes and people, and then they end up making a lot of money. So in 10 years, my guess is half of all the largest financial institutions in the world will be native digital. It's not a stretch. The reason it's not a stretch is take every industry. I mean, imagine like when the internet came and someone said, here are the biggest newspaper companies. In 10 years, these will still be the same, the legacy. It obviously wasn't. They were all replaced. If you took media, the same thing. All these media companies in a digital world lost market share to companies like Netflix. And of course, I saw this in telecom, which is where I spent most of my career, where the wireless companies became the most important businesses, much bigger than the legacy telecom systems.
Hey, I am Maria with Daily Dose Crypto. Have you noticed that gold, silver, and Bitcoin have hit all-time highs recently? Is this a coincidence, or are smart investors onto something? The dollar is depreciating, inflation is eating up all of our cash, and the US national debt is through the roof, hitting new highs every day. That's why people are shifting to alternative assets like gold, silver, and Bitcoin. We at Daily Dose Crypto have partnered with iTrust Capital, your one-stop platform to buy and securely store 80+ digital assets, including Bitcoin, gold, and silver to hedge your future against debasement. With over 200,000 accounts, 15 billion in transactions, and 11,000 plus positive reviews, they're helping real investors build long-term wealth with their tax advantage, IRA, and PCA, which is a premium custody account that supports the highest level of custody and security in the space. They do this all with institutional-grade custody through partners like Fidelity Digital, Fireblocks, and Coinbase Prime, keeping your assets secure while you can trade 24/7. Fees are just 1% per transactions with no monthly or annual costs. Getting started is simple. Sign up for free and fund an IRA or PCA today. You'll receive a $100 bonus and start growing your assets the smart way. Click the link below to open your account now and begin your journey toward generational wealth.
I wanted to talk to you about why BitMine is probably one of the best positioned companies if the crypto winter is ending and crypto spring is underway. Okay. So here's the reasons. We've done a lot of things during this crypto winter, and in chronological order, we made an investment into an AI company called AIDCO. We launched our staking business called Maven. We are now the largest single staking operation in the world. We actually have several $billion of other people's crypto staked. We put $200 million into Mr. Beast, which positions us to make sure that future content creators, as they build on the blockchain, hopefully settle on Ethereum. And we have more than 4% of the supply of Ethereum. When we started the company in June of last year, our goal was to get to 5% of the Ethereum supply. Now, it was somewhat aspirational when we did that, so we thought it could take 5 years. But as you can see, we've been able to actually do this at a very quick pace. We crossed 1% on August 13th, 2% in September of last year, 3% in November, and we crossed 4% in early April. But I do think we're going to slow down our pace of buying. I'm not sure we want to get to 5% too quickly. If we continue at our current buying pace of 100,000 ETH a week, we're going to be there in 6 weeks. So I think we're deciding perhaps we want to accumulate at a somewhat slower pace because there's other things to be doing in crypto right now. We just got uplisted to the big board. And we announced a repurchase program of $4 billion in case that's a better use of our capital. And we're also working really hard with anybody who is interested in staking, because we launched our commercial service at the end of March. We're currently staking $14 billion of Ethereum of crypto, so it's more than our current holdings of Ethereum. We've staked about 85% of our own Ethereum, but we have other people's crypto, including Solana and Canton, and we hope to increase that. From our own staking, our own holdings of Ethereum, we have annualized staking revenue of over $300 million now. So it's about $1 million a day. And when you factor in our cash, which currently is around $700 million, BitMine is clearly profitable, more than $1.2 million a day in cash flow. And we made an investment in a company called AIDCO, ticker ORBS. If you're not familiar with them, it's the largest holder of world, okay? the World Token, that's a project Sam Altman created that does proof of human. There's a lot of reasons to like World, and that's a big part of the balance sheet. But as you can see here, 8Co also owns a very sizable stake in OpenAI and MrBeast. So think of this as a closed-end fund with exposure to some of the most important parts of the future agent system and the need to protect you from AI. And I think a good comparison is a company like Fundrise, ticker VCX. As you can see, they own a selection of somewhat hard to get private companies, trades at 6 times net asset value. 8Co gives you exposure to all these companies and is trading at a huge discount to VCX. And if you're not too familiar with World, it's becoming increasingly relevant. 8Co puts out some great press releases talking about all developments within AI. We also have a $200 million investment in MrBeast. I think a lot of younger folks are very familiar with MrBeast, but really the thing that we're most interested in is their efforts to create the next financial platform. They acquired Step Financial. We do think MrBeast is going to be the Robinhood, Chime, and SoFi of Gen Z and Gen Alpha. And again, for us, we're the largest corporate shareholder in MrBeast. We have a $200 million investment in them. And keep in mind, MrBeast's target audience is going to inherit significant sums of money over the next 20 years through wealth transfer. Okay, and lastly, in the last couple minutes, I just want to talk about BitMine and our role as a digital asset treasury. I think it's important to outperform the underlying crypto, and that's what we've been able to achieve. I'll give you some numbers. Last year, from June 30th, which is when BitMine was created, to December 31, Ethereum rose 22%, but you can see BitMine rose 503%, and that's 48,000 basis points of outperformance. In 2026, Ethereum is actually down year to date. I believe it's going to end up strongly positive. BitMine has fallen less, so it's outperforming the underlying crypto. And it's not a surprise, because if you put on the x-axis here the price of Ethereum and the y-axis the price of BitMine, the biggest lever for BitMine's stock price to go up is what Ethereum does. It's basically the biggest part of our balance sheet, so it's not a surprise. And the correlation is 90%. Well, if the correlation holds, which it should, and we overlay different price targets for Ethereum, okay, and I showed you earlier why we think 22,000 is a reasonable price. That's just the price ratio of Ethereum to Bitcoin at the 2021 high. Well, at that price, BitMine would be a $500 stock. If you believe in tokenization and agentic AI systems, and therefore you get excited about Ethereum, which is, a scarce settlement layer, pristine, and never had any downtime, and it gets to 62,000, that would be 0.25 price ratio to Bitcoin. You get a $1,500 stock. And as you know, there's folks like Securitize and Joe Lubin who really see tokenization becoming a hundreds of $1 trillion market, a lot of that happening on Ethereum. So that would be 250,000 Ethereum, which, by the way, Ethereum is disinflationary. Since we started buying Ethereum on June 30th, the supply of Ethereum has actually been negative. But that would get a $5,000 price for BitMine. So you can see, in our view, the risk reward is very good for BitMine because we've got a lot of bets laid out there. Ethereum, staking, a lot of moonshots, and of course the stock, we think, generating $1 million a day in cash flow is a great business.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.